Okay, the HDFC Q2FY21 numbers are out and they are along expected lines. NII, your net interest income, came in at 15,776 crore versus 15,665 crore Q on Q. So slight growth, but versus last year's 13,515, it's a very handsome increase. Profit 7,500 versus last quarter 6,600 or last year 6,300. So even profits have grown well. Just keep an eye out for the fact that your other income is up a fair bit at 6,092 versus last year's 4,000. Some stake sale gains from sale on investments has definitely led to a little increase in your profit. Operating profits, that is 13,814 crore versus last quarter's 12,800 or last year's 11,700. So it's increased operating profits as well. Other income, I said already. Then coming to asset quality, if you look at the result, it says gross NPAs 1.08% versus 1.36%, net NPA 0.17% versus 0.33%. Now, when you read the media release, there's a disclosure which has Proforma statement, which basically there was a Supreme Court hearing, as you know, a long-drawn battle in the Supreme Court regarding what to do with the interest on interest regarding moratorium. Now, as part of that, the court had put a stay on banks declaring further NPAs beyond August 31st. So if it was not deemed an NPA prior to that date, banks were not allowed to disclose it. So that's why this NPA figure is looking lower at 1.08. HDFC's separate disclosure states that the actual NPA would have been up to 1.37% versus 1.36% Q on Q. So actually a slight uptick to pretty much flat. And against this same pro forma increase in NPA, which would have otherwise been the case if Supreme Court had not put a stop, they've taken provision of 2,300 crore. So that's how the provisioning has shaped up in relation to the pro forma NPAs, which are not reflecting immediately on the result. You have to read the release to understand that. So that's one thing to keep an eye out for also, which is important. Then, barring that, we know that the deposits and advances for this franchise are both growing well. Deposits, if you look at the statement, 20% growth like was indicated, and advances nearly 16% growth. So growing credit doesn't seem to be a problem, and as money is trickling in, low-cost deposits, that will continue to be fuel for your bank to grow future credit. Let's also remember HDFC is one of the few large banks that didn't really do a large equity raise. There was no need. The capital adequacy is more than sufficient. That the same cannot be said for a lot of the other private peers. Like even Kotak Mahindra Bank did a QIP, although they did it, I think, just before COVID. They did do it. ICICI did it. Axis did it. HDFC Bank didn't need to do it. So a good result. It's been probably one of the better performing banking stocks. So no major red flags coming out of this.